Hello and welcome. Welcome to EPK Capital's Daily Brief, bringing you the essential financial news impacting global markets over the last 24 hours. Today is Monday, October 20th, 2025, and we're seeing a distinct shift in sentiment compared to the turbulence late last week. Let's dive into the details. We're kicking off the week on a generally positive note, especially in the US and Asia, as markets rebound from fears that gripped investors last Friday. As of midday trading here in London, which corresponds to the pre-market and early trading hours in the US, the Dow Jones Industrial Average is trading around 46,330, up approximately 0.5%. The S&P 500 is near 6,690, also gaining about 0.5%. The tech-heavy Nasdaq Composite, represented by US 100 futures, is showing strength, up around 0.65% near 24,947. This follows a strong performance in Asia earlier today. Japan's Nikkei 225 surged an impressive 2.9%, closing near 48,965. Hong Kong's Hang Seng Index rallied 2.4%, finishing around 25,854. The Shanghai Composite also posted gains, up about 0.7% to close near 3,866. European markets, however, are painting a more mixed picture after opening higher across the board. In the UK, the FTSE 100 is currently trading around 9,397, reflecting a gain of about 0.46%, holding onto its positive open. France's CAC 40 opened higher, lifted by positive news in the luxury sector, although current live data is lagging. We'll monitor its progress. Germany's DAX index is the notable outlier. After opening up around 0.8%, it has reversed course and is currently trading significantly lower, down approximately 1.8% near 23,986. The specific catalyst for this sharp reversal isn't immediately apparent in major headlines, distinguishing it from the broader positive sentiment. So, what's driving this rebound and the regional differences? Several key macro factors are at play. Easing US-China trade tensions, this is a major theme. Markets reacted positively late last week after President Trump confirmed an upcoming meeting with President Xi and seemed to soften his earlier threats of massive 100% tariffs. His comments over the previous weekend, urging calm and calling the situation a bad moment for Xi, also helped set a less confrontational tone. The lack of further escalation over this past weekend is allowing relief to build. Reduced U.S. regional bank fears. Last week saw significant jitters after regional lenders Zions Bancorp and Western Alliance reported issues with bad loans, raising concerns about credit quality after a period of higher rates. This sparked a sell-off, particularly in banking stocks, both in the U.S. and Europe. However, these fears appear to have subsided somewhat since Friday's partial recovery, contributing to today's broader market lift, especially evident in the positive performance of U.S. indices. Federal Reserve rate cut expectations. Market participants are strongly anticipating monetary easing from the U.S. Federal Reserve. The probability of a 25 basis point rate cut at the upcoming Fed meeting is priced at nearly 99% according to the CME Fed Watch tool. Expectations for another cut in December are also solidifying. This dovish outlook is keeping Treasury yields relatively low and boosting risk assets like stocks and crypto. The 10-year U.S. Treasury yield is currently hovering just above 4%, around 4.02%. China's economic data. Released earlier today, China's Q3 GDP figures presented a mixed picture. Year-over-year growth slowed to 4.8%, the weakest pace in a year, matching expectations but down from Q2's 5.2%. However, quarter-over-quarter growth came in at 1.1%, beating forecasts of 0.8%. Industrial production for September was also a bright spot, rising 6.5% year-on-year, well ahead of the 5.0% expected. Conversely, September retail sales were weaker than anticipated, growing only 3.0%, highlighting ongoing challenges in consumer demand. The property sector also remains a significant drag. While the data wasn't uniformly strong, the positive surprises in QoQ GDP and industrial production seem to be outweighing the negatives for market sentiment today. Japanese politics. The rally in the Nikkei is partly attributed to growing expectations that Sanae Takaichi, perceived as being pro-stimulus, will be elected as Japan's next prime minister. On the political front, the main market-moving comments came before the weekend. As mentioned, President Trump's slightly softer tone on China trade, coupled with the confirmation of a meeting with President Xi, provided relief after his sharp tariff threats on October 10. There haven't been significant new market-moving statements from major global political figures in the last 24 hours, allowing the focus to remain on economic data and corporate earnings. However, the ongoing U.S. government shutdown continues in the background, now entering its third week, delaying some key economic data releases. Turning to corporate news, earnings season is underway. In Europe, Swedish orphan Biovitrum, or Sobi, reported strong Q3 results today, beating expectations and raising its full-year outlook, driven by performance in key drugs. However, there was significant negative news impacting specific European stocks. German industrial conglomerate ThyssenKrupp saw its shares tumble over 22% following a spin-off. And UK-based retailer B&M European Value Retail slumped around 18% after announcing its CFO's resignation and cutting its profit forecast due to an accounting error. In the US, several companies were scheduled to report their Q3 earnings before the market opened today, Monday, October 20th. These include Cleveland-Cliffs, CLF, the steel producer; Dynex Capital, DX, a mortgage REIT; Summit Therapeutics, SMMT, a biopharmaceutical company, which also presented clinical trial data over the weekend; HBT Financial, HBT, a regional bank holding company. Important note: as of the time of this recording, midday London time, early pre-market US time, the specific earnings results, the actual earnings per share and revenue figures, for these US companies were not yet widely disseminated or indexed by major financial news outlets. Investors following these specific stocks should look for the official press releases and monitor their price action throughout the US trading day as the market digests the results. Summit Therapeutics also released positive news today about expanding its evolocumab drug development program into colorectal cancer, which could influence its stock performance alongside its earnings and ESMO data update. Let's look at commodities in the crypto space. Gold. After hitting record highs above $4,370 per ounce last week amid the banking fears and trade tensions, gold has pulled back slightly. It's currently trading in the $4,240 to $4,260 per ounce range, still historically elevated but off its peak. The slight easing of immediate risk factors and perhaps some profit-taking are likely contributors. Oil. Crude oil prices are edging slightly lower today. WTI crude is hovering around $57 per barrel, while Brent crude is near $61 per barrel. Concerns about potential oversupply and the impact of China's slower annual growth rate might be weighing on prices. Cryptocurrencies. The crypto market is participating strongly in the risk-on rally. Bitcoin, BTC, has surged, breaking decisively back above the $110,000 mark and is currently trading around $111,000, up significantly over the last 24 hours. Ethereum, ETH, has also rallied, pushing back above the key $4,000 level, currently trading around $4,045. Other major altcoins like BNB, XRP, and Solana have also posted solid gains. This crypto rally is largely attributed to the same factors boosting equities: increased expectations for Fed rate cuts, making speculative assets more attractive, and the easing of US-China trade tensions reducing global macroeconomic uncertainty. So, to summarize today's key market themes, we're seeing a rebound rally, particularly in the US and Asia, driven by relief from easing trade tensions and last week's banking sector jitters. Strong expectations for Fed rate cuts continue to underpin risk assets, including a notable surge in cryptocurrencies. China's mixed economic data hasn't derailed the positive sentiment so far. However, keep an eye on European markets, especially the divergence seen in the German DAX, and watch how the US market digests the pre-market earnings reports throughout the day. While the mood is more optimistic than last Friday, underlying concerns about global growth, inflation, and geopolitical risks haven't disappeared. That's all for this market update. Be sure to subscribe for regular financial insights. Trading involves risk, so always do your own research. We'll see you tomorrow morning with the latest developments.